So my name is Tracy Clarke and I am a non-executive director of Acin Limited. I've been on the board for just over a year now, and prior to that I spent my executive life at Standard Chartered Bank for 35 years. My role for the last 5 years was as the CEO for the Europe and Americas business of Standard Chartered, and also head of private banking globally. I think that operational risk management is one of the most challenging aspects of risk management for all banks, in fact all financial services firms, and largely because it's an area whereby there are limited standardised frameworks for risk management. It's also an area that is very diverse. There are many operational risks that firms face. They manifest themselves in very different ways. They evolve over time. So it's very challenging to, at any one point in time, to have a clear view of risks, but then more importantly than that, to have a complete set of effective controls against each of those risks. And what's effectiveness all about? Well, effectiveness means that if you've got a control that is intended to prevent a risk from crystallising, that it works. If you have a control that's intended to detect a risk event that's already happened and detect it quickly, it needs to work, it needs to be effective. And it's very difficult for any firm to, at any one point in time, to understand the extent to which the operational risks that the firm's running are well controlled by the control inventory that's in place at that point in time. So without completeness of controls, operationally it becomes very challenging. In fact, completeness in controls can mean the right amount of controls, not too few, not too many. It means that all of the controls are operating as effectively as they're designed to do. And I know even in my experience at Standard Chartered, against any one risk, there can be many controls, both preventive and detective. And because of the number of controls, it's often quite difficult to see the wood for the trees. So to really understand those controls that are more predictive, more preventive, more detective than the rest. And operationally, that's therefore challenging. Whether those controls are manual or automated. And then reporting against those controls becomes overly complex. So I think completeness doesn't necessarily mean I have enough controls. It also means that the ones that I have are working as effectively as possible. And we all want operational simplicity as much as possible, and that's very difficult to achieve. Of course, it's not just the cost of the operational inefficiency associated with incomplete controls, or the cost of fines, or the additional cost of assurance. It's also about risk capacity and capital, because of course, often after a risk event has crystallised, a regulator may require additional capital buffers, which impacts risk capacity. So with a complete risk inventory, with a complete control inventory, effective control inventory, a firm can really help to not only reduce costs, but also enhance risk capacity. So for firms that know that they have a challenge in terms of operational risk completeness, of course I would advocate that they do seek out firms like Acin, and there are There are consulting firms out there that can certainly help. Acin's platform today is quite unique. It does enable firms to benchmark their own risks and controls and the effectiveness of those controls against a peer group and a network of peers that is growing all the time. So whether it's the start of the process to clean up data, enhance data integrity, whether it's really to address the question of whether the control inventory is complete or working as effectively as it might, or whether it's actually really starting to look at enhancing risk capacity, reducing expected loss, take a look at the Acin platform. It really could be a good solution to these questions.